What's up, everyone? Welcome to Legends Trading Journal. On this channel, I'll be documenting my ICT 2023 mentorship journey from, just learning how to trade and becoming a consistently profitable trader by the end of this year. That's what I'm aiming for. I finished episode 1 of the mentorship, and to be honest, it was something that I wasn't really expecting, given that I'd already gone through it, but going through it again, everything took me by surprise. The things that I missed the first time, there are a lot of things that I actually missed. And it's some things that I really didn't think were important that actually, were more important than I thought they were. Things confused me too. There's some new things that I came upon that the first time I didn't really think about it because I wasn't really focused to be honest, I wasn't really focused on it. But this time around, it sort of made sense. It just pushes me to want to continue and really know more and understand what I was going through. So I'm going to divide this video into seven parts, right? The first chapter is going to be I want to call it the surprise phase, right? The surprise phase. The things that surprised me about this mentorship, like that's the first chapter. The second chapter is going to be, as I said, before the day or before the chat, think about this. This part is just going to be explaining the way ICT approached the market from a daily perspective, like from everything about the day, the news drivers, the particular day it is. So the third part is going to be a differentiation between narrative and bias. Yeah, narrative and bias. And this part, I think I'm going to pair it with the other one because there are going to be lots of definitions and explanations to what narrative and bias is in reference to the day and trading, like in reference to the day of trading and trading itself, how as a trader you can approach the market with that narrative and bias in mind. The fourth chapter is going to be top-down analysis. It's going to be top-down analysis. How ICT did his top-down analysis from the daily down to the 1 minute time frame where he took his entry. Now the fifth part is going to be talking about liquidity, right? Because liquidity is actually a topic that confuses a lot of traders, confuses me too, to an extent. I understood liquidity in this video, but I believe there's still more to learn about liquidity. I think this is the last chapter. It's going to be talking about my biggest breakthroughs in this video, like in this particular episode of the mentorship is the sixth one, not the last. Now the last one we are going to be talking about the final hour macro. The final hour macro. I know as a trader, you have to know what your kill zones are and how you can trade them. And this particular chapter is going to talk about the final hour macro. It's just a tiny period in a day where you can actually get some very precise entries and runs. So ICC actually gave this up on his first video. Like imagine on his first video, he actually did this. So the last part, yes, I think that's the last part. So we are going to have a bonus at the end. Yeah. We are doing bonuses, right? On our second video on YouTube, we're already doing bonuses on what we are giving or what I'm giving out, to you guys to watch. And I really, really, really wish you guys enjoy this video. So just like, subscribe, and let's just get down to the video. So let's talk about the surprise, right? Let's get into the video right now. Let's really dig into it. Let's talk about the first surprise I had. I don't think a lot of traders know this, but ICC actually gave a roadmap to how to go through the content on his YouTube channel, which is free. Of course, the content is free, right? So as a forex trader, you might be thinking like, I want to start trading ICT. I want to get into ICT, but I don't really know where to start from. Spoiler alert, it surprised me too. ICT already gave a roadmap on how to go through his content as a forex trader. The first thing you have to do is to go to his YouTube channel. Then you go to the playlist. From there, you're going to see every playlist ICT has made, and all of them are free. So the first playlist you should look out for as a forex trader is the Market Maker Primer series. The second playlist is the Market Maker series. I've actually gone through it personally. Some time ago, when I was really into forex, or when I was just getting into trading, I think this was the playlist that I went through, and it was really good. That's why I got to learn about time kill zones and the time of day to trade. It was really, really great mentorship. The third playlist you should check out as a forex trader is a pattern recognition series. The fourth is Mastering High Probability Scalping, Volume 1 to 3. That's the fourth. Then the fifth is Scout Sniper Basic Field. Sorry my pronunciation. The Scout Sniper Basic Series. Yes, that's the next playlist. Then the last one is just the core content, the ICT core content, and it runs from month 1 to month 12. And this core content, I don't really think it's only for forex traders. I think every trader should actually really look into it. ICT has actually given a lot, because this mentorship is what he students paid for in 2016, but he just put it on his YouTube channel for free, guys. Like, and I've gone through it, but I think I ended him on 3 or 4 like that. That's why I end. So I have a very bad habit of not completing my videos about the mentorship. So this one, I'm really dedicating myself to it, and making sure by the end of this year I must have finished it, documented it, and posted it here, so anyone who wants to get into trading can actually see how far I've come. And it's for myself too, because I want to look down the line some years to come and be like, this is where I actually took trading serious. So the next part of this video is going to be talking about the before charts, like the things ICT actually looks into before getting into. There are some questions I think he asks himself before he gets into trading. And these things he asked, I think it really helps in the decisions he's going to be making throughout that session or that day. Like what kind of day it is. Is it a public holiday? Is it a Friday? Is it a day before NFP, a day before FOMC? And like, how are the big players going to be participating in the market, right? Is there any big news that is coming out for that day? He actually takes out time to really figure out and use this information to his advantage. And I think that's something a lot of traders don't do. I myself, I didn't know it before starting this mentorship. So I'm really going to be applying that, going down the line. This video is really going to be coming in, from the second, because the second we're talking about how ICT approaches a day with the questions he asks himself, like what kind of day it is and what the market is going to be doing, the people that are involved in the market. So now that now comes down to the narrative he has about that day and the bias he has. And the difference between narrative and bias is there's a very thin line between it, and a lot of people confuse what they are. I think a lot of people confuse what they are. Me personally, I used to think they mean the same thing, whereas they don't. Bias, from the way I understood it, is just what direction you think the market is going to go to. If the market is going to be bullish, bearish, or sideways, that's bias, right? You go into the market, you look, the market is going to be bullish today. That's your bias, bullishness. Then narrative now, it is the way the market is going to be trading, the way the big players are going to be booking the market. Is it going to move from is it going to trade to a daily low before trading to a daily high, or is it going to be moving to an imbalance before trading higher, or anything like? That's just narrative. That's narrative. And these two factors, the narrative and the bias, they go hand in hand. They go hand in hand, because when you have a bias, you now have to create a narrative of how the trading day is going to look like. I think that's actually really a really good game changer for any trader. Any trader just considering trading as a whole. And just more narrative. I think for the day of trading where he did this video, I think the bias was the market was going to be bullish. That was a bias. The market was going to be bullish, and the narrative was it was not going to take out any previous daily high or previous daily low. So he called that particular day an inside day, right? So you see, before he even had to do his top-down analysis, he really had like a direction, a narrative for the market before he did anything. And that's something a lot of people actually miss. That's something a lot of people actually miss. A lot of people don't even do it. And you'll be asking yourself, why am I not profitable? Why am I not consistently trading, making money from the market? And these are just the little things that actually make traders good. like differentiates good traders from bad traders. This is just one of those things, right? Now, this now go down to the top-down analysis. After getting all these things, the narrative and the bias, the next part is going to be the top-down analysis. ICT, the way he connected the time frames from the daily to 1 minute time frame, it was actually really like impressive to me because he used PD arrays, right? Like a lot of people will just go down to the lower time frames and start looking for trades, but I think that's the wrong approach. I think you have to go from the higher time frames to lower time frames. And a new thing I learned was there's something now called nested PD arrays, which I didn't really know. ICT had a series of imbalances from the 4 hours to the 5 minutes chart, and he called them nested PD arrays. And you could see in the video, if if you go through your mentorship, you'll see how he used all of these things to land himself in a very, very good trade. And you look at it, and it just makes everything look smooth and easy. Having a process through which you go through the charts. He made it look so easy, so easy. Now, talking of top-down analysis, you're doing your top-down analysis, and you have to be targeting something, right? And what's that thing you'll be targeting? There are two things I still said you can be targeting: liquidity and imbalances. For now, we are going to talk about liquidity, right? This is going to be another chapter in this video. This liquidity is actually a concept that is very broad, right? And I cannot talk about everything I learned about liquidity in this episode, but I'm going to just throw some light on where I still said liquidity is on the chart. Liquidity is on the daily highs, daily lows, old daily highs, old daily lows, and old highs and old lows. Old highs, old lows. I think that's the places where liquidity lies. And liquidity is that one thing that drives the market, right? Is where the market moves to. And why does the market have to move to these areas? It's simply because those are where the orders are. Those are where stop losses are. That's just what liquidity is. Liquidity are just orders that are placed in the market. So the market moves towards them. It's a concept I cannot really say I'm versed with it now, but I'm going to, as I'm studying and going down the line, I'm really going to understand it more. Then the next thing the market targets are imbalances. And there's a thing that struck me, because I used to confuse imbalances and voids, like liquidity voids in market. I just used to confuse them, but this episode actually clarified me a lot. This episode actually clarified me a lot, and that is our next part: imbalances and liquidity void. This is something that a lot of traders, I don't want to say a lot of traders, but me in particular, it used to confuse me. And imbalances are just an aggressive movement of a candle in one direction. Market delivers in one direction and doesn't deliver in the other. It creates an imbalance, right? Because the market has to be balanced. Balance in what term? The market has to offer buy side and sell side. So if the market delivers sell side and doesn't offer buy side, at that point in time, the market is imbalance. You see, that's why ICT, you hear ICT traders talk about buy side imbalance, sell side inefficiency. You hear sell side imbalance, buy side inefficiency. It simply means the market has been delivered to the sell side, but the buy side is inefficient. The market has not delivered to it yet. So that is something. And a liquidity void is just an area in the market where there hasn't been any trading, like between two candles where the market just kept that part. That's a liquidity void, and we see a lot of this in new day open gaps, new week open gaps. For someone who has been in the ICT trading space for some time, you're going to know these things. But for somebody who is just new, I don't think you're really going to understand these things, especially these new day open gaps and new week open gaps. And as a futures trader, there's a word ICT used to explain. I've forgotten how they call that PD array. It's a particular PD array where it's a switch from the regular trading hours to the electronic trading hours. So it's just something that has to. That's where you see a lot of liquidity voids. And going to the next part of this video, we are going to be talking about the final hour macro, right? We're going to talk about the final hour macro. Now, this actually is something that I've used it before. I've traded the final hour macro because let's not forget, I'm not just new into trading. I'm not just starting trading. I've been in the market for some time now. So a lot of these things I'm versed with them, but I'm not just using them correctly. You see, so ICT actually spoke about this final hour macro, and I'm going to try to explain it in a way that I understand it, in the way that can make sense to anyone who is watching what this final hour macro is. Chapter 7, the final hour macro. The final hour macro is a trading window between 3 p.m. and 4 p.m. New York time. And there's one thing I haven't spoken about. As an ICT trader or someone who is using ICT to trade, you have to put your you have to be trading in New York local time. You have to go to your charts and set your charts to New York local time. And this final hour macro, the way I still said it, it's a small window of trading where you are just looking for five handles, a 5 handle move in the market. It is that simple, and a lot of people think they have to catch that much handles, but you just have to be consistent with the 5 handle. And the final hour macro gives that. So how does it work? It starts from 3 p.m. New York time to 4 p.m. New York time. And there are rules to this, right? Like for every trading strategy, there's a rule. The final hour trading macro has one rule. If you don't have a target 10 minutes before 3 p.m., you should stay out of the market. You should stay out of the market. Now you're just looking for what you're targeting for during this time is an old high or an imbalance. We already spoke about this too, right? An old high where liquidity resides or an imbalance where the market is not balanced. That imbalance could also be a liquidity void where there's little or no trading and the market has to run down to close or to balance the market. I believe there's more to this concept that I don't really understand, so I wouldn't really be speaking much about it, but I just thought I'll bring it out because that's something I still spoke about in this episode of the mentorship. And like I think I've backtested. I've done a lot of backtesting on this particular period of trading, and it's quite something. It's quite something to check out for. I'm going to be looking and doing more backtesting on this because the way I work, I get back home really late, and I think that's where I'm going to start my trading again. Now, on our bonus tip, a lot of people think price moves from buying and selling pressure, but ICT does not agree with that. ICT says the market moves algorithmically, and as it moves algorithmically, it moves in cycles, right? So the market moves from it consolidates, it expands, and it continues. So if you're trading and if you're in a trade and the market is consolidating, then expands and you get into that trade, there's no way the market is going to reverse. Just keep that in mind, right? That's just one bonus tip because the market does not just move randomly. It's algorithmic. It's not buying and selling pressure that moves the market. It is these market cycles that govern the market through an algorithm, right? And the ICT PD arrays and everything ICT calls his PD arrays are just different tools the algorithm uses to move. Does that explanation make sense? If it doesn't make sense today, I'm going to look for a better way to explain to you guys, but that's my bonus tip. That's my bonus tip. So thank you guys for watching. And talking about things that confused me in this video, in this particular episode, we have things like the breakaway gap. He spoke about it in the video. I've done my research on it, but still confuses me. But pretty much I'm sure down the line I'm going to understand it. And there's another thing that I think the other thing was, I think it was still liquidity, right? Because the concept of liquidity is just so broad that I didn't really get to understand it fully. But for now, I know liquidity is found on old daily highs, old daily lows, old lows, old highs. That's where liquidity lies. I just have to understand more about the liquidity. Then I think I did very solid in this video on this episode of the ICT mentorship, I got my notes down. I understood a lot. I'm going to be bringing you guys the next part, the episode 2. I'm going to be pairing up the episode 2 and the episode 3, because the episode 2 is just about 9 minutes. It was just explaining some few things. I'm going to pair it up with the episode 3 and drop it to you guys. So if you want to, see what the episode 3 and 2 of the IC 2023 mentorship is all about, just subscribe, like, and if there's something you think I missed, you can leave it in the comment section. And if there's something I explained wrongly, you can just leave it in the comment section. Let's learn together.